Hello and welcome to the Plus3 Futures and Commodities show. My name is Ben Maldonado. I'm here as always with Barrie Hederachi. How are you today, Barrie?
I'm doing pretty well, Ben. Pretty well.
Yes. Saturday morning after an active week. It's always invigorating when the markets move and we see it's moving. So we got a packed show today. Let's get right to it. As you can see, we always start off with Bitcoin. It's a good proxy for risk and the speculative mania in our in these markets that we've been experiencing. And Barrie and I were talking about Bitcoin all week. It's saying it's kind of in no man's land, but it's firm. I mean, it's bullish because we're above this full square. We're above this whole consolidation that happened after that plunge in May. So you can't say it's bearish. The only hesitation I would have in getting involved here is we're still below the half square, and which encompasses this whole structure at the high that we had. What are your thoughts on Bitcoin now, Barrie?
Well, where you cover, I think your assessment is pretty much where I stand. With we're above all that, above the old highs. And your full square, but it's also below the 50% of the square above, right? And we did like little mini 3 drives up there. Mm-hmm. So I would say it's still soft here. It has all that overhead to absorb if it's going to move. I think a little bit no man's land.
I'm with you on no man's land. That was the exact thoughts I had. Let's jump to the big five. Let me throw it over to you, and let's look at the big five and see where we are in these major markets. I can hear the ice cracking as I look at the E-mini.
Yeah. So let's take a quick look. I'm always trying to figure out where we left off last week. Basically, we talked about the 44.92 level being resistance. And we really couldn't, crack that and hung out under and eventually broke the big trend line that we've been sort of hugging for months and months. And we started to turn down. So I would say the next support level is really the main square that we talked about back in June. And the support there is around 43.50. It's really, we have 43.40 is where the square is. So it's really between 43.40 and 43.50. I would say anywhere in here, especially somewhere around this low back in August 19th. And that low was, was 43.48. So it's right in there. That's the next level of support. There's really a big void in here. There's not much to hold it in place. And if we go drive down, if we recover, we have to do it like right away. We have to do it probably Sunday open and recover. But if we start to slip down, I think this 43.50 area is next support that we have. Let's take a quick look at the weekly. For a reference. So on the weekly, we've been talking about this 144 square. We've been talking about it for a couple of months, actually approaching it and then trying to get above it. And our whole take there was that we really need to hold above it. And we had to hold above this 44.88 on a weekly basis, fairly close to 44.92. It's in that ballpark based on, different squares and different geometry. So, but we know that general area is right up there. And that if we couldn't hold above, which we couldn't last couple of weeks, then we're probably done with this. It's possible that we're done with this entire leg, as far as I'm concerned. And we might mess around, we might start lower, but it's possible that we're starting at some sort of a down leg.
Barrie, and looking at a down leg potentially starting, one of the things that you and I always talk about, and I share it, on Twitter, is when we have these cycle changes, these big cycle hits, which we've had a couple weeks ago, we look at the markets and we see, what changes? How does reaction to news change? How does price action change? What are the things that you've noticed have come to pass since that cycle happened? Like, what changes have you noticed?
Well, for one thing, clearly, a glaring one is that the volatility sellers are not there.
Right.
Last week,
Mm-hmm.
not by any great mean, right? They didn't show up. We don't have the rallies that we used to have at the end of the day or midday or off support. And so selling was fairly persistent. So that was a clear giveaway.
And one of the things I was noticing too was reaction to news has changed. Whereas bad economic news was good news for the stock market and we would rally, they tried that again after the CPI report, and then they ended up selling it.
Exactly. And you saw some connection to bonds and the dollar last week. I know we talked about that midweek. Maybe you can cover that when you're talking.
Sure.
On your thing.
Go ahead. I just wanted to bring that up because I think it's important to be aware of these changes and how reactions thing, because it creates a need for a different strategy when you're trading.
Absolutely. And then I'm glad you brought that up, because that's really the case. The fact that we couldn't hold above the 144, we couldn't hold above this 44.90 area. Now, really, from a square perspective, we're probably done here for a while. So 43.48 would be the next support level. And if this 43.50 area gets taken out somehow, then I think we're really in for some sort of a, decent correction or pullback within this huge up move we've had. Mm-hmm. So those are the numbers to watch. And unless we get a nice setup, and we'll cover that, Twitter or next week, unless we end up on really good support, we have cycles showing that we have a pullback. As far as I'm concerned, long as we're below this square, the market's soft. So you got to watch that.
Okay.
And that's the whole point of tracking all this, right? So yeah, so that's that. Getting on bonds, we left off, we drew up this little block a couple of weeks ago, and 162.08 was our support level. And we're bouncing right along there. And there's not much to do here other than, we talked about us being trapped in this range, and that's pretty much what's happened. It's actually gotten narrower. And at this point, if we take out 162.08, 162, that area, I'm guessing the next stop is around 159. So this is the next level, 159. We've been talking about that for a while. We're on key support. And if this area holds, it might be another, we might be able to trade the upside for a short time. But we are in the mix and we're looking weak. We got lower highs coming through. And it's looking fairly soft, but on support. Anything you want to add to that?
I agree. We're stuck in the channel. You either got to trade the channel or wait for it to break.
Right. A quick hop over to the weekly. And you can see bonds could afford to go just a little lower and still be fine. We got this trend line that's been working fairly well. And so on the weekly, it just looks like a fairly normal pullback. Not a lot of fanfare. It's just, it's right there. So the key area is to watch how we handle support down here. Mm-hmm. And that brings us back to the daily. It's either 152 or 159. And 159 should get us into that same trend line area. So it supports down here. For now, that support. And looking a little weak, looking at the trend lines and the lower highs coming in. Yeah. Moving on to crude.
Crude looks good.
Yeah, crude looks good. Crude, we've been, bullish, very bullish on crude. And last week, I think we talked about 69 being taken out. And if we get above 69, that we're going to trend higher, which we did. And really, the next level to take out will be this 1/8 level, which is around 74. So if we take that out, then 79 is the next stop. And it looks firm. Like I said, above the 69 area, it's firm. It's just a matter of lining things up properly to trade the long side.
We got nice confirmation too off your ABC that completed at that low. The move off of it looks genuine.
Yes, exactly. That ended perfectly, and a nice 1, 2, and it's possible that this could be a 3, or we could do another ABC up.
Mm-hmm.
But either way, it's on firm grounds, and I think we've been able to stay on top of this fairly well, right?
Agreed. Yep, looks good.
That would take us, ABC up to the upside will take us right into about 70, 76.5. So we still get upside. We know where the lows are. Looking at the weekly, same story. We had a square up here, didn't quite hit it on time, but we're above the 1/8, which is around 69. So again, it's nothing dangerous there for the time being. I think we're doing okay. Moving on to gold. Pretty active week, at least the latter half. I think we left off last week talking about the 1789 being a key level to hold, and if we lose that, the next stop's going to be the half square. And it looks like the next stop's going to be half square, since we couldn't hold the 1789, and that ends up being right around 1738, 1737. Okay.
I like your fork too. If we pull back and find support on that fork, it'll give you a higher low to create more upside momentum too.
Yeah, fork's a little tricky here. I'm not sure if that's the correct setting, but I had it there, and seemed to work. And maybe might have to adjust it a bit. We'll see how that goes. But for now, gold looks a little weak. We don't really have support till we get down to around the 1738 level. And if that goes, then probably going to go and flush these lows out. So not bullish at the moment till we hit 1738 and that support holds, then everything could flip around. And gold on the weekly, again, we had this box drawn up, and long as we were inside of that, we thought that the market could move higher. So the key was that level to watch. Level didn't hold, so now we wait. Not really fond of taking this on trading this on the short side. But for now, I think this line is the next line of level of support on the weekly, and on the daily, it comes about roughly the same area. So we'll see what happens next week.
The weekly really shows you the bigger picture bullish structure, though, doesn't it?
Yeah, bigger picture is bullish. This is so far anyway from the data that we have. It's in a good spot. You can see coming off the low back in 2015, where we held above, those spike lows that it might have to get washed out are right there, around 1669. That's where that line came from, the dotted line. And you can see it was the second square 52 that they couldn't take out. So really, the next leg would have to really clear this. We're between squares, kind of like Bitcoin. So we're stuck in this range. And we'll see how that works out. For now, we're looking for it to go back and test support. And on to the dollar.
Dollar caused some havoc this week, didn't it?
But for people watching this, we talked about the 92.55. That's a key area, 92.50, being able to hold it. And if we get above, it's bullish. Pretty much what's happening. And the key level to watch above would be around 94. That's the half square. And at least go challenge the highs back in August. So this is looking okay so far. It's according to it's moving according to what we thought, and yeah, never really came back to test any of this. And that 92.50 was the right sort of the balance point, right?
Mm-hmm.
Let's take a
And I can see the strength in this dollar when I look at the commodity charts. A lot of them are still correcting and consolidating and triangulating, waiting, for the next big move.
Right, and I think we dropped this channel in last week. You can see we're at the bottom of the channel. Clearly, we're going to go test the higher limits. There's more to go, and that would pretty much get us into that 79, or I'm sorry, 94 area. So it's looking okay so far.
Mm-hmm.
And get the square. So you can see the half square is really what we're looking for as a target. Half square on the weekly, which is the same as the targets we're looking at on the daily. So euro, it's basically the other way around.
Mm-hmm.
And well, we had the box. We, pretty much the time that dollar put in the lows, euro put in this high right at the half square. And I'm guessing it'll just be the inverse, right? Euro should go back and test these lows, at least the bottom of the range here. And that's around, let's just say around 160, about 1658, 1685.
Mm-hmm.
And if we failed that range, the next real support is around 1559. Let's say 1560 is really the next support. And that's a number right here in the corner. For now, we're hoping that the support might hold here. And looking at the weekly, here's our fork we've had in there for a few months.
Working really well.
Working well, it's really getting tested, eh? So,
Mm-hmm.
the thing to watch is, boy, I tell you what, if this breaks, dollars are going to run, right? There's our one of our signals.
Mm-hmm.
And if you just take the fork, we could easily break down to check the next level down, which is really around 1400. So there's a bit of a move there.
Mm-hmm.
And I think that covers my stuff. Yeah.
Excellent review of the big five.
Thanks, Ben. Let me put it back to you.
Okay.
There we go.
There's our old friend ES.
Perfect square line. Look at that.
Yeah, I wanted to
show. Get above that.
Right. I wanted to show it's just slightly different than Barrie's, but it paints essentially the same picture, which is, look, we've broken the trend line from the June lows. We've rolled over at the highs in a cycle hit window, but this is the real telling thing. All last week, they tested it. 1, 2, 3, 4 different days they tested this square to see if they could get above it. And the answer was no. And so late Friday, we saw what happens when resistance holds, right? The sellers get emboldened and they take the ball and they start selling. So exactly. We want to watch this. We want to see, what the reaction is. Can the bears answer Sunday night, Monday, and, push back up in here and see if we can get another test? Or do they just give up, and are we going to head down to this half square, which is around, 4295, 4300 area? Mm-hmm. That's really the alternatives that we're looking at right now. Do we take out the Friday lows easily and keep pushing, or do they, try and bail it out one more time and get it back into this resistance area? So we're watching that to see what they have in mind on Sunday night, Monday morning. NQs is a similar story. We pushed up. It's interesting. They were fighting over here, and I thought this was going to be the point where they gave up. But then there was, of course, one more push. They get up to the half square, can't get above it. A lot of testing midweek, trying to hold, and then give it up at the end Friday. So the big test here and the big clue as to what the direction is going to be is this sort of 15,125 area. If it holds here, sits on top of this previous highs, that's bullish, right? We can make another push higher. If it gives it up, then we're going to have a test of this trend line for sure, and then maybe we go down and test the half square or the full square here at the lower levels. But NQs, I think, are looking heavy, and if we see weakness there, it's certainly going to bleed over into the ES. You have anything to add on the NQs, Barrie?
No, I think you got that. Half square, full square is the support. Really have to watch that, because if that goes, it could really snowball into something fierce. So we got to watch those. Yeah. Watch that low. Watch the full square below.
That full square, yeah, that's going to be the key test, and it may happen early in the week. So we want to watch it because it's going to give us big clues. Mm-hmm. Let's jump right over to crude. Barrie talked about crude. Very bullish crude. I want to show crude first because there's this pattern that we've picked up in these different commodities of, sort of fourth wave corrections or some sort of corrective action in a channel or a wedge or whatever you want to call it. And crude did a perfect ABCD down, as Barrie showed, and then we rallied up. We've broken through the channel. And now we're coming back and sitting on top of a square. This is really bullish in our work. This is what you like to see, right? You got a low, a signal that something ended here. You have a strong reaction off. But the key thing is the reaction gets through resistance, whether it's trend line or in this case, both trend line and the square resistance. So as long as crude pulls back into this area, we're going to be really, really bullish on crude. Higher prices
in the near term for sure.
In the near term, absolutely. Bigger picture, it looks good too, but this is on a daily basis. We're just talking about dailies and trying to give you the setups for things that are looking good.
What's your square level there, right under the full square?
The support, the full square is around 70.53.
Got it. Okay.
And all these levels, by the way, are up on a spreadsheet that we update a Google Doc. So, and we post the links on Twitter and on the page where the videos are. So you can visit that spreadsheet and see where all these levels are on a daily basis. So that's crude. So let's go take a look at gold. Here we've got gold. So gold is interesting in that we've got a similar channel to crude. We had not quite a full ABC down, but it did do an ABC, didn't quite make it to the bottom of the ABC. Then it did a push up, but we couldn't get above the square. And see, that's the difference between this and crude at this point. Crude pushed through the channel and got above the square and sat on top of it. Gold got stuck under, and here we are back in the channel. The interesting thing about gold is that we pulled back right to my half square. So if these lows can hold, there's the potential that we could see strength in gold from here and we could challenge this full square again. So right now in my work, the full square is really, really important because you can see the last 3 times it's gone up there, it hasn't been able to get through. So if we can get back up there and test it and get through it, that's going to be really bullish. The structure and everything and momentum is not favorable right now. And most likely we're going to get another push down, as Barrie was talking about. So we're going to be watching to see where that, if they can push it down, where it gets to and how price reacts. But bigger picture, still bullish on gold. Just wanted to show you the similar pattern with crude and how, not getting through that square sets itself up for some more weakness.
And what's your half square, Ben?
Yeah, the half square here is around 1743, 1744.
Got it. Thanks.
Let's go take a look at silver. And there's silver. Silver's in that similar channel, right? It tried to push up at the same time gold broke out of its channel. Again, got caught below a half square, which if you can't get above it, that just means that the sellers are going to come at some point. Well, they came, they actually pushed through the full square, and now here we are. looks like the setup is to go down and test this half square down at like 2150 and the bottom of the channel. The momentum is not there for a bullish move. The momentum is actually in place for more selling. So wouldn't be surprised to see it take out that spike low we had on that ABC down, sort of clean out the lows that were here and over back in October and December before the next move up. Bigger picture, still very bullish on silver. Just we're stuck in the channel and now we're below a full square. So we're in a vulnerable position in silver right now. Anything you have to add on silver?
No, you got it. I think no, I think you got it.
Okay, let's jump over to the grains. Grains are also, like most of the commodities, correcting and in a corrective phase. I think we are super close to making lows for these corrections. If some of them haven't already done it, and we're on red alert for getting trading positions in the grains, bullish trading positions. You can see here's wheat. Wheat is the strongest of the three grains that we follow. It's been in this channel. Looks familiar, doesn't it? Like the other commodities.
Well, also, Ben, if you look back, we had about 5 of those channels before the market moved higher.
Absolutely.
From May to July, down channel. Then we have March, down channel, right? Then November, December, down channel. They're all over the place. April, June last year. So we got to watch the break of this and trade it accordingly.
Absolutely. And that's why I say this has been a bullish correction. It's just a matter of when do we get involved again in the market. I mean, we traded, these different legs, and that's what we try to do. If you're using, ticking time bombs that options are, you have to trade the legs. You're hanging around in this and you're going to get killed because of the time decay. But anyway, the things to note here, we're above the full square. That's bullish. Friday, we closed above the half square, also bullish. Now, we didn't quite break out of the channel, so it may dip back in again, but we're watching wheat very closely, looking probably on the shorter time frames as well for a good entry here, because the correction appears to be ending and the bulls are starting to step up a little bit here and pushing it. Getting it above this half square is a big deal. If we can stay above it, it's a really big deal. So that's wheat. Let's take a look at one where I think the correction has ended and it's starting to look much more bullish, and that's corn. So why do I say that in corn? On the daily, we have a nice structure down, very organized, ending on an ABC. Always, if you can find an ABC, it gives you a chance of finding something ending and something else starting. So we look here, we see an ABC, we say, okay, time to watch this and see what we got. Well, we got a very strong reaction off of that broke through a downtrend line from the June high that had multiple hits on it. Two different hits, 3 hits in total. We broke through that, and we broke through the full square that we're now pulling back and sitting on top of. So while corn may not take off tomorrow, Sunday or this week, it's setting up for a very bullish move. As long as these lows hold, as long as we hold this square, this is in a bullish position where surprises could be to the upside. So corn is one that we are actively looking for entries on this coming week with proper setups. Barrie, what are your thoughts on corn? I know we talked about it earlier in the week.
Well, for next week, it's mainly just watching see if we can stay above the full square and then look forward to trading alongside.
That's right. Well put.
I think the main, just watching that lower square. That's all.
The weakest one of the grains is right now is soybeans. But as you can see, even though it's weak, it's been in this falling wedge since July. It broke out of the wedge on Thursday. Couldn't quite hold staying on top of the full square. So that shows there's a little more weakness here than in both wheat and corn. So we're watching it. it's kind of the laggard of the group. But again, if we can get a low in place on good support, maybe it's going to have to wash down to the full square, or maybe it just does make a higher low here and gets above this half square. Either way, we can look to start getting involved once we see signs of it, capturing support and staying on top of it.
Yeah, that 1296 is the key now to watch.
Absolutely. And that's the half square.
Right.
And again, these levels are in the shared Google Doc spreadsheet that we'll post links to on Twitter and make sure it's on the video page. But the grains, and just summing up the grains, they're in different phases of bottoming, but the group looks to be bottoming and getting ready for the next move up. And as Barrie pointed out on the wheat chart, that pattern of these down channels then resulting in the next leg higher, I think there's a good probability that pattern continues in the grains. So we're watching the grains closely. Let's see. The last one I think we're going to look at is not one that's actionable now, but one that we've been all over for quite some time, and that's natural gas. Now, I'm not putting natural gas up here to brag. I'm putting it up here to show you what happens when you get it right and what you look for once you have a bullish market, how you sort of manage it and what we can do to get back in for the next move. So you're trying to catch these impulses, right? These big moves higher. We got this last one over the last month or so, which odds point to something culminated up here. It's based on squares. We didn't quite make it to the full square, but really close on the weekly and the monthly, which we're not going to show, but we'll do that. We do that on the longer term show once a month. We did hit full squares, pulled back, held support. The next square here is this 510 area where if we get stuck below that, it's going to signal to us that yes, something ended up there and a correction is starting. So what are we doing in natural gas? It's bullish. There's no question about it. Bigger picture, weekly, monthly, we still feel there's a lot of upside to go. From a tactical trading standpoint, you're taking profits. You're looking for spots where there can be an entry again. Like where is it going to set up? So we're watching price now. If price holds on this square, super bullish. If it can't hold on that square, we're going to come back down to the 450 area or the half square around 480 and see if it can hold there. So we want to manage the short term, trying to grab profits on a spike move with the bigger picture, longer term view that on a monthly basis, maybe we're in the third or fourth inning, not the eighth or ninth inning. So it's just some ideas and some perspective on how you deal with a winner and how you can try and stay into something for the bigger picture, longer trend. Barrie, why don't you add some more on that? Because you and I have been talking about that a lot this week.
Well, it's just being patient, waiting for the market to tell us when it's ready. And in this case, we're looking for clear support. So this 510, 55 area is support. And the next, if we don't hold there, it's probably the next level down. And, considering the acceleration we had and the parabolic sort of a move, I think it might be done, like you said, that phase might be over. So we have to wait to see till the next consolidation is done. And we have the level, so you just patiently wait till it lines up and take a shot.
Right. And just to give you an idea, we're not expecting like a collapse. It's sort of, this is the kind of thing, which is a 2-week correction, basically a half square, 3/4 of the square, or this type of correction, a little longer one, like maybe a 2-month correction with a square and a half. We don't know what it's going to do. We don't know which one it's going to choose. We don't even know if it's going to correct. It could turn around and head right back up again. But it's
good to know the level. So I have like around 460 around there to be the next support, which is sort of in that middle of that consolidation from before, prior.
Right in here. Yep.
So that's, let's see how it goes.
Yeah.
It's been
So
amazing so far.
absolutely great ride. And these are the things we're looking for and trying to bring to everyone's attention. They don't always work out that way, but when they do, you want to try and manage them properly. So that's why we brought it
And
up.
Ben, speaking of highs, it was interesting how we were talking on the day of the high. It was funny how many articles, news items were online about natural gas. And I think we talked about that, seeing all that through, all the information. We're like, well, that looks like a high, by the time it hits Main Street.
No question, Barry. That was a brilliant comment you made in the middle of the week. You said, hey, by the time it hits the news wires, the big boys are going to be selling. And that's it looks like that's what's starting to happen. Again, bigger picture, still very bullish. What we're talking about here is short-term type trading. So you have to keep the ideas, the short-term recommendations and the long-term ideas sort of separate, because it can be confusing if you don't. Bigger picture, we're still very bullish on natural gas, expecting significantly higher prices. It's just, taking advantage of a spike in the market short term is what we're discussing here today. I think one of the key things, Barry, that we can end on this week is we had a major cycle change in early September. We've seen the markets kind of snap out of those summer doldrums, and things are moving. So more than ever now, it's watching your levels, being patient, waiting for the market to set up in a manner where you have that favorable risk reward.
Absolutely.
Because chasing in this kind of environment is what's going to get you killed. Either way. So anything else to add before we end it for this week?
No, I think no, nothing much to add. Everything's fairly simple. Things that are moving are moving. The other things are on key levels. So we just watch those and trade accordingly.
All right. Well, have a great week, everybody. Best of luck in trading, Barry. And we'll see you next week, hopefully with a lot more action in the markets to talk about.
Thanks, Ben.
All right. Take care. Bye-bye.
Bye-bye.